a shareholder in several tech stocks, including Twitter and Alphabet. Ryan Jacob of Jacob Asset Management. He's on the phone with us today. It's good to have you here. What do you make of this today from Snap?
Well, Snap's having some of its own issues that are specific to the company. I'm a little less inclined to believe that this is really going to read through too much in the rest of the social media space. The story's really been competition. It's been TikTok, Facebook. It's really impacted their results. So now you have a bit of ad weakness on top of that, and it exacerbates their problems.
Are you worried about Alphabet? As a result, I mentioned you do own that stock, and if this is beyond a social media story, if you will, and is more of a direct digital advertising story, are you concerned?
I think the social media plays that have the higher brand advertising exposure. So when you look at a Snapchat, it's somewhere around 50% in terms of brand ads. And then when you look at a Google or even a Facebook Meta, which we don't own, you're looking more in a 10 to 20% range. I mean, those are the kind of numbers or kind of ad spends that could get cut quicker than some other advertising spends where they're seeing higher returns on investment, where it's more measurable. So I think that's where you'll see less sensitivity and probably more sensitivity to those companies that have the brand market exposure.
Curious of your view of the landscape in general. I mean, this is not your first tech blow-up rodeo. And I don't know if you just heard my conversation with Professor Jeremy Siegel of the Wharton School, who said this is not 2000 all over again. You agree with him or not?
I do. I think anyone who's been through that period realizes that that was more of a generational bear market, especially when it comes to tech. You had endless supply of VC money funding companies that were just becoming customers of each other. When you look at the tech sector today, it couldn't be more different. Most of the largest customers to the tech leaders are Fortune 500 companies. I mean, we're no longer dealing with experimental type purchases. These are core type businesses for them, or core type expenditures, whether it's advertising, infrastructure, other types of tech spend they're making. This is really to upgrade and move on to next generational systems that are really important for them in the future, and that spending won't stop.
It's good to talk to you, Ryan. I appreciate your time. That's Ryan Jacob joining us today.